Happy Friday, traders, and good morning from Chicago. It's 8:02 a.m. Chicago time on Friday, the 5th of August, 2022. This is episode number 2288. Today is non-farm payroll day. U.S. unemployment numbers are out, and they were blowout numbers, as you saw the market responding. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of the future results. Guys, I am so burnt out and exhausted and tired. I might not even trade today. I want to bite my tongue saying that, but I just need to just chill. So if you hear my voice, that's why. I'm just not. I just need a break. So next week I'm going to be doing the Trader Bites in the morning. I will be visiting family in Canada. I'll be out and about. So I'll be visiting family in Canada next week. I'll be doing a Trader Bite, doing my homework for the conversion trading members. But I will not be trading during the day. So if you're a Convergent member, be advised that the CT Mavens will be covering their products, but I will not be around for trading. So very hot U.S. employment numbers this morning: 528,000 versus 250,000 expected. Really, we've been in a downtrend on the unemployment, the non-farm payrolls, and today kind of reversed that. Check this out. There it is. If you look at the 5-year, the 1 year, you can see that we've kind of bopped down and put in a low in April and have been rising since, which is kind of a seasonal thing. But we expected this thing to be even worse, and it came in a lot better. And what this means is more pressure on the Fed and interest rates. That's what that means, and that's what the market's responding to. The bonds, gold, the notes, the dollar index all just had very impulsive moves. Gold moved from approximately 1805 down to a low of about 1780 or so. Pretty gigantic move for gold. Silver is the same. Silver is down 3%, and the bonds and the notes had a similar thing. I'm seeing multi-distribution or double distribution profiles across the board here as the market is surprised by the outcome of this release. So that's the big news. Nothing really major expected or left on the calendar. Do expect some comments to randomly show up either by POTUS or by one of the parade of Fed presidents talking about, doing what they need to do to make the market chill down or pipe down so they don't have to do a 75 basis point increase in September. So that's where we are. Earnings, we had some big ones from abroad: Deutsche Post, Suzuki Motor. We had Goodyear, Western Digital, Frontier, and a few others that I get listed everywhere, like DraftKings. Who cares what DraftKings earnings are? I don't get it. They earn like maybe $500 million a quarter or something. Liberty Media and TELUS all reported. The S&P, just to get through this, the S&P is in a multi-distribution profile. I'll show you the profile and talk technicals in a minute. Multi-distribution profile. Decent volume, but not heavy, 224,000. And we have the inventory at 39% short. The range is outstanding. The range is above one standard deviation. One sigma of the last 252 days, 62.5. Points in the S&P and a clear downtrend, and I will not gloat about the fact that I talked about this yesterday, and I had talked about 41.44 being tested, and if it holds below, then we're looking at 41.20. If we don't do it yesterday, then we're likely to do it then we're likely to do it on the non-farm payrolls, and that's what we did just now. We went to 4120, built a high volume node there as expected. That is the MC point of control, the 4120, and then we released to the downside and pushed to 4104 before the bounce. The low to me remains weak. This is not an excess low. The market is not responding as if it has pushed too far too soon. So it's likely to puncture that overnight low at 4103.75 to give us the overnight stat, but I'm expecting the market back at 4120. And I talked about this. This is a very this area here is, if you recall, if you were here yesterday, I talked about the moon around the planet, the gravitational pull of the planet, and that the moon needs to accelerate hard to break orbit and to parabolically move into outer space, and to release itself from orbit, and that the pushes into 4174 and so on are likely not enough, and it's likely to pull back and come back into orbit, which is 4120, which is where this major balance is. So let's look at that here for a minute. Here's the S&P, and there's the balance. There's the balance that I've been talking about. That's the balance that I've been talking about. And what we did yesterday was we pushed, but we were mainly sideways. And the expectation is it's likely to push back down into the 4120 because we are stuck in this heavy volume area on the profile. So that's what we have. I'm not including that in here. If I do, see, watch. Let's include that in here. There it is. So you can see how heavy that is once we include the TPO profile. You can see how heavy that balance is, and we're right underneath it. I'm expecting us to get caught in that 4120. Hey, it's better than trading moon cycles on the S&P, which some people do. I shouldn't laugh, but because who knows? So looking at this from a volume profiling perspective, it's really very clear to me. Again, yesterday was very murky. We took out that 41.44, but it just very poor trading underneath there. We got to 41.36 yesterday, so we squeezed through by 8 points, but we couldn't hold at that level. We couldn't hold this 41.44, and we ended up just chopping around and going sideways yesterday, and we finally release now to the 41.20. So keep an eye here on this area. It is very likely to remain in this region. You can see there's a multi-distribution profile here with a very weak low. So the expectation is it's likely to continue to push to 4100 and then eventually get back into the 4120 and get stuck there. That's what we're looking at. If you recall, I talked about the idea that we do have a weak rally structure from the other day. Plenty of single prints and just overall pretty weak structure. I can show you that a little bit here. See these TPOs on the left. This is the ES. This is Crude, the two main products that I trade. And you can see that we balanced up here on Wednesday after running up. We opened, tested down, and we rotated up. And then yesterday we balanced lower, so we again shifted the point of control lower. And then we repaired, these are single prints right there. We repaired those single prints, but overall the structure here is relatively weak. So again, that lends itself most likely for it to go down to the 4120. And then now we're in this heavy area in here, and it's likely to get trapped. I don't expect the market to run away from here very easily. just like it couldn't from the top side. I hope you get that. You understand the references in terms of how the auction works and how prices rotate and what attracts price, what rejects price, what footprints or markings are left behind by the traders, the participants, every single day. They leave certain clues, and our job is to pick up the clues and see what this means. Interestingly, Crude did not respond to this at all, really. We did have a kind of a whip down. So here it is. We had a very big, we started at 88. What was the SOC? The SOC in Crude, I posted it in Convergent Trading's channel. The SOC for Crude is 88.88, right up here. And we whipped down, came back up, took the SOC out, took out the prior swing high, and then just sat sideways. And I'm sitting here going, man, this should be I shouldn't say should. This is expected to be bearish for crude as well, just like it is for gold, for everything. There's essentially more of an incentive for the Fed to push for a recession. So I expected it to roll down. Of course, I started to wrap up to prepare for this broadcast and also do my homework. I couldn't do it last night. And that's when it sold off. But I was looking for a place to sell crude, and it just would not do it. So crude ended up trading in a very balanced profile overnight, with that 88 region being the overnight point of control, and we're underneath it. Very, very interesting reaction in there. It seems to not respond as well as it normally does to the movement of other products. So here's the S&P. Again, the overnight session left a big low volume zone here. There were some big sweeps in the overnight session. The tape was very, very interesting. They just kept, every time it would pop higher, they would sweep it down. Look at this zipper that was formed right in here. And yes, you've got it. It was formed right around that 41.20. So it rested here. I actually looked for a stab. I took a stab long. Once it put in this higher low, I took a stab long looking for it to rotate back to this area right here. And it just wouldn't go. It gave me a chance to kind of flatten out, and then it sold off. And right now, I think the low is still relatively weak, and we have the overnight stat to play with. Okay? So I don't want to say much more than that. Like I said, I'm pretty tired, and I'm going to just leave it there. Today's Friday. It's non-farm payroll. The movement is likely to be early on. I would suggest that after the European close, which is 10:30 Central, 11:30 Eastern, that this thing is likely to just float around aimlessly. And then with it being non-farm payrolls, Monday, which I'll not be here for, Monday, we are likely to see a very, very slow, very conservative kind of quiet trade, which is common for non-farm payroll, the Monday after non-farm payroll. So the market's likely to digest this news today. On the open, we're likely to see a flutter, a push, directional push one way or the other, as the rest of the participants react as the market, the equity market broadly opens. But overall, I'm expecting it to be relatively quiet today after that. Okay, we do have a wide range, which normally portends, or I don't want to say predicts because it's really not predicting. It normally portends a relatively widely traded or a relatively decent price discovery. And we do have some decent structures to trade off of here. So let me zoom out a little bit. This 35 is of particular interest to me. Right here. You have the mid VWAP area. You have a price structure. There's some stuff back here. We have an IB here. that was tested from above before we rallied back in this area. So this 41.35 is likely to be the limit on a push higher. So I'm seeing this as pretty decent resistance on a rotation up. Again, don't lose sight of the fact that we are actually rotating within the MC point of control. The MC point of control in this area, we are rotating right in this fat area. It's likely to be choppy and frustrating today. So be careful. Be careful not to commit too much to your trades. Just hit and run until the market kind of starts running, which I don't expect it to this morning. I would also recommend just sitting out the first 20 minutes to at least a half hour. Wait for the first bracket to finish, the first 30-minute bracket to finish, and then assess the market. Take a good look at the market. Take a good look at your plans. And that first half hour will likely clean up and reveal who the participants are and what their appetite is, whether buyers or sellers, before stepping in. It is not worth trading the first half hour today. That's what I'll leave you with. Good luck, and I will catch you on Monday. See you, everybody.